Now, the World Bank has approved an 11.4 billion rand loan for South Africa. The money said to help to protect the vulnerable from adverse socio-economic effects of the pandemic. Now, the move to request the loan has been met with some skepticism by some. But what does this debt mean for a country like South Africa? To speak more on this, we've got Emma George from IQ Business joining us now to talk further about this. Emma, thank you very much for your time this morning. And I just want to start with that skepticism that exists around the loan, and just wonder that perhaps South Africa had no other alternative and had to approach an institution like the World Bank for the significant loan. A positive here is that it's at a low interest.
Good morning. Yes, I think skepticism here is largely around the lending-borrowing relationship in general, and we know that COVID-19 has exacerbated the weak fiscal positions of many countries. And so it was an important move, and organizations and institutions like the World Bank play a really important role in helping countries in their journey towards sustainable development. And I think that it does come at low interest, and any skepticism is more around the often unequitable position in negotiating the terms of these loans. So I do think that it is important. I think it can really, really play an important role in the sustainable, in the post-COVID recovery economically, and it is part of the World Bank Group's country partnership framework with South Africa, which is really geared towards stimulating investment, job creation, and to achieve economic and social convergence for a more inclusive and resilient society. So towards this end, it was an important move, and it really does have the potential to help in the post-COVID recovery.
No, absolutely, but it does make developing nations like South Africa a little bit more vulnerable, because at the end of the day, it is still debt, and debt that South Africa is expected to pay back. It's also expected that South Africa will meet certain conditions in receiving this loan, and many a time South Africa is slow to deliver on certain conditions that are thrust upon it.
Yes, and we see that historically conditionality has been very prescriptive. But I think we are seeing more of a move to where we subscribe to certain conditionalities as we subscribe to globally agreed upon imperatives. If we look at the United Nations Sustainable Development Goals, for example, combating climate change, more inclusive and sustained economic growth, I think that is influencing the conditionality attached to a lot of loans, funding, aid to countries around the world. But you're absolutely right. We need to look at how these relationships are formed and to ensure that there is a more equitable engaging between lender and borrower, so that there isn't room for an opportunistic debt trap diplomacy, that there is more room for countries to assert themselves on the global stage and to engage in these relationships of lending and borrowing. So these institutions, such as the World Bank, the IMF, from whom South Africa also secured a loan last year, they play a very important role in helping a country towards its economic development goals. But we just have to make sure that these relationships are equal, and that countries do have a say in the terms of these loans.
And I'm glad you bring that point up, Emma, because that was going to be the next part of our discussion, the importance of the fiscal stability as well as the sovereignty of a country when entering into these agreements with institutions like the World Bank. Maybe if you could just elaborate on that element of the fiscal stability here that's needed or will be created through the loan, but also not compromising the sovereignty of a country.
Yes, these loans should not compromise any fiscal sovereignty or sustainability of a country. And so we do need to look at whether these loans and these relationships provide a threat or value to such sovereignty, to such fiscal sustainability. And that's why we look at the relationships that these loans engage with. So to make sure that a country is able to hold its own, essentially, in these lending relationships. But if done so and if invested in exactly what they're intended for, which is stimulating investment, job creation, and more social, inclusive, resilient economic development, then it shouldn't threaten the fiscal sovereignty of a country or its sustainability. It should aid towards it.
And this might be a little bit of a difficult one, Emma, but how does a country avoid returning to the World Bank hat in hand in future instances? Maybe another pandemic will hit or any other world crisis could affect South Africa and we might find ourselves in a bit of a bind. But how then does a country prevent itself from going to these institutions and asking for money? Does one of the elements, I assume, has to do with the fact that if we are investing in growing the economy, we might have some money in our coffers to prepare for disaster times like we saw over the last 2 years?
Yes, I know a lot of people do talk about the concept of sustainability, sustainable development, sustainable economic development, and it's for a very good reason. If we are able to implement really sustainable economic growth policies, then it does contribute towards our ability to grow our economy, to secure more job creation, and to have greater financial inclusion in the economy, which does contribute to a country's growth and to a country's ability to sustain its growth and to contribute even on the world stage. But you hit the nail on the head when you said that, you know, a lot of it is the result from the pandemic. COVID-19 exacerbated already fragile situations, economically speaking, around the world. They exacerbated the weak fiscal positions of many countries. And so turning to the World Bank with a very deliberate purpose of meeting these recovery goals was an important move.
Right, and there are so many issues. This is my final thought from you, Emma. So many issues that need to be tackled by this loan that we've received. But if you had to look at the stakeholders, or if you had to engage different stakeholders, perhaps even the economic cluster, what would you say is the priority in terms of focusing on and then filtering through to the rest of the country's needs?
I think immediately it's post-COVID economic recovery, and that is National Treasury's plan to invest in economic recovery following the global pandemic. And then obviously job creation, stimulating growth in the economy, and really, like I said before, aiming towards policies, implementation, and initiatives that are geared towards sustainable economic development. And social and economic development are very closely intertwined. So investing in the ability for more people to join the job market, to interact in the economy, and to essentially sustain our economic activity.
No doubt, a very difficult task for the President and the rest of his cabinet. Emma, many thanks for your time this morning, joining us from IQ Business, breaking down some of the details of that loan that was received by South Africa from the World Bank and the implications thereof.